Hey everybody, are you dreaming of owning a home but like super overwhelmed about the whole down payment thing? In this video, we are going to break down the truth about really how much you need to put down to buy your home. And we're going to provide you with expert strategies, and I have Bob here with me. Bob is with Cadence Bank and he's going to give us all the secrets about financing a home. Whether you're looking to buy your first home or your second home, vacation home, this video is really gonna help you break down everything that you has to do with buying a home and financing your home. And this is why Bob is here with us today. Welcome back to My Agent Gabe channel, where we share powerful knowledge to elevate your real estate game and gain a competitive edge on this crazy market that we're living now. So Bob, like, I know the first thing that people would ask, like, that they goes through their mind is like, how much money do I need out of my pocket to be able to buy a house when it comes to down payment and all that kind of stuff, right?
Right. Well, yeah, there's a lot of misconceptions about how much down payment you need to buy a house. The interesting thing is, it's really not as much as you probably think it is. We actually, for first-time homebuyer programs, there's 0% down. There's some where they can get 100% financing on some programs. FHA is 3.5% down. Conventional is 3% down. And then if you're not a first-time homebuyer and you're buying a house, it can be 5% down. So again, there's a lot of options for someone buying a home, primary residence. For investment property, there's going to definitely be more down. Typically, it's about 15% down that you have to have for that. But again, not a lot of money. And then also with second homes, minimum of 10% down. So those of us looking for second homes, maybe someplace cooler than Florida in the wintertime, in the summertime. So yeah, we've got a lot of options for down payments.
What would determine like how much money you have to put down?
Right. So there's a lot of things that go into determining that. Obviously, the type of home you're buying makes the biggest difference. If it's a primary residence, second home, or investment, those are the main things. Then it comes down to what your credit is. If it's a condominium, you're going to have to put more down. Typically about 5% more down on a condominium. But that's a good question, and it really just comes down to you need to be talking to an experienced lender to figure that out, how much it needs to be put down.
So Bob, the other thing is, like we always say, is like, when you're buying a house, you have the down payments, which can be 3, 5, 10, 20%, whatever.
Or zero.
Yeah. But then there is the closing costs. And then we always talk about closing costs. But then, like, what exactly is the closing cost? Because it's not just money that the bank is charging to give you the loan. It's stuff that you would have to pay regardless. Right. So just tell us a little bit exactly what the closing cost is.
Closing costs are definitely fees that you pay to purchase the house. If you're a buyer in the state of Florida, you have to pay for an appraisal. You've got to pay possibly a closing fee for a survey. As we mentioned, homeowners insurance. You have to pay a year's homeowners insurance up front. In the state of Florida, we have transfer taxes, which are pricey, but what I tell people is, well, you don't have state income tax in Florida, so we pay a little bit more on the closings. So those are the fees that add up, and it's really, from the bank standpoint, there's really just usually one fee, like ours is $1,300, but the rest of the fees you're going to pay anytime you do a real estate transaction in Florida.
Yeah. So this is like closing costs in general.
Right.
So that's like when you're buying a house, if you're financing, you're going to have to decide how much money you're going to put down.
Right.
Sometimes you're not going to be able to decide. It's going to be you're going to be told. So what are the advantages of putting more money down? Because I've heard, like, sometimes you don't have to, like, don't think like just putting a bunch of money down is going to really help you. So how should you come up with that decision?
Well, what I do with my customers is I say, okay, this is the least amount you can put down as from a project standpoint, financing standpoint, and then decide if you want to put that down or if you want to put less down, more or less to it. If you put less down, and we've had this happen recently with a client that we helped, decided to hold some money back because they wanted to do some renovations to the project, to the property later. Not a lot, but a little bit. So that's how you really have to decide. And then also with what your financial situation is. I mean, some people, they have a lot of reserves, they can put more down, and obviously the advantage of putting more down is you're borrowing less, so it makes your payments lower. But from a standpoint of interest rates, it really doesn't affect it that much, usually, how much you put down.
But then there is mortgage insurance.
Right. Yeah. Anytime, and this is why a lot of people think you have to put 20% down, which you don't. But if you put 20% down, then you don't have mortgage insurance. Well, mortgage insurance is really just a fee that you're paying to borrow less. And that's the way I look at it. The good thing about mortgage insurance is it can go away after you get to 78% loan to value or pay it down to that point. Typically on conventional financing, which is what most people do, Fannie, Freddie, you've heard the term. On those programs, you have to put 20% down not to have mortgage insurance. But there are other programs out there. Like, for example, I have the ability to do an adjustable rate up to 90%, and it doesn't have mortgage insurance. But yeah, the mortgage insurance is something that people sometimes decide to pay, and it can be removed later on if you do decide to do it.
Okay. But sometimes, because that's a personal experience, like when we bought our house, we bought it with an FHA loan, and the bank like that we use, it wasn't Bob, but somebody else. We cannot get rid of our mortgage insurance, and we already paid, like we already on the other side.
The other side of it now.
So we pretty much have to refinance. But that's another video that Bob can do it, because this is not going to be about buying a house. Who wants to refinance? You just want to sell your house and buy another one. But like, if you need to refinance, don't tell me. Just go to Bob.
Just call me.
Just call Bob. So guys, this is it for our video now. If you have more questions, if you want to just schedule like a little talk with Bob, there's going to be a link in the description, and then you can click on that and schedule a time to talk with him, a phone consultation with Bob Sanders. I know like this is just like we are getting like in the beginning processes, but this is just like with the real purpose of giving you an idea of what to expect and kind of like start that process, because homeownership is amazing. We love it.
And we want to help as many people as possible have that dream and realize that dream.
So this is really like what puts the fire on us, is to really help as many people as we can to get on their homes.
Yeah.
So if you want to talk with Bob, just click on the link and schedule a time with him. And if you want to buy a house, you can click on the link too and schedule a time with me, and I'll send you to Bob.